Friends, welcome back to another video. So in today's video, we will be doing accounting paper 1 for November 2023 from the Eastern Cape Provincial Department. So in this question, we will finish this question in 3 videos. So this will be the first one where I'll be covering fixed asset note, the accounting equation, and some GAAP principles. And then in the next video, we will do income statement, then balance sheet, then ratios. Okay, so that is how we will do this question paper. Please don't forget to like, comment, and subscribe to the channel. If you find this very helpful, please subscribe. Let's get right into it. So guys, when you get your question paper at school, it's very important to read instructions because you might miss something that applies to the entire question paper in the instruction and information page. So let's just go through them quickly with you. So the first one says, answer all questions. The second one says a special answer book is provided in which to answer all questions. And then the third one says a financial indicator formula is attached at the end of this question paper. The fourth one says show all workings to earn part marks. So it's very important not to just give the final answer, but to show how you got to the final answer, because that can give you extra marks. Okay, sometimes your calculation is correct, but you transferred the wrong amount by mistake. So it's very important to show your calculations so that your teacher can give you marks. So if you include your workings, part marks will be given for your workings. You may use a non-programmable calculator, which is your Casio, your normal Casio calculator. You may use a dark pencil or a blue or black ink to answer questions. Where applicable, show all calculations to 1 decimal point. So accounting deals with money, and sometimes decimals are there in 1 or 2 questions, right? So it's important to just round it off to 1 decimal point, just as you had been given in the instruction. Sometimes they can say to 2 decimal point. So it's very important that you go through your instructions and know exactly what needs to be done. And then they say write neatly and legibly. Very important. Practice writing, your handwriting. If educators struggle to read your handwriting, use the information in the table below as a guide when answering the question paper. Try not to deviate from it. So question 1 will be accounting equation and fixed asset note. Question 2 is the statement of comprehensive income. Question 3 is statement of financial position and notes to the financial statements. That is the balance sheet. Wow, it has more marks. 50 marks in total. Question 4 has financial indicators and interpretation of financial statements, which is 35 marks and a total of 150. So this is the time you are expected to take on each question. I would advise you have a wristwatch when you write an exam so that you know that you do not exceed the time given. And always, guys, start with the question that you know. Is very important. It builds up your confidence to answer the entire question paper without problems. So start with what you know so as to make it easy for yourself. Don't frustrate yourself and start with things that are hard for you. Start with things that are easy for you. That is very, very important. So now we will get into our question paper. That is question 1, equation and fixed asset note, 20 marks, and we are required to take 15 marks analyzing these transactions. We are going to do the accounting equation. Okay, complete the table provided to indicate the effect on the accounting equation for the transactions listed below. Follow the example provided. So assume that a note says assume that the bank balance is unfavorable and the perpetual inventory system is in use for all transactions. And then example 1 says purchase trading stock on credit. This is an example they've given to you and they've shown you how you answer it in the answer book. But just for interest's sake, when we purchase trading stock on credit, creditors' liabilities increase because credit it increases creditors, right? We're buying something with the money that we do not have. So trading stock is what we sell. So assets will also increase as trading stock is an asset. So let's answer our question. For 1.1.1, the account of a debtor who could not be traced must be written off as irrecoverable. So we had a debtor, the person that owe us as a business. Now this person can no longer be traced. We have sent emails, letters, everything that we could possibly do, phone calls, and this person is unreachable. What we do, we have exhausted ways to try to recover our money from this person. So we write this person as a bad debt. As you know, bad debts are under expenses in the income statement. People that we can no longer reach to retrieve the money. We give them credit, now we can no longer find them to get back our money. So we must be written off. So expenses will increase. Expenses fall on under owner's equity. So owner's equity will decrease because of this debt. And debtors will also decrease because we are losing out on a person who would have potentially paid us. Well, for 1.1.2, so for 1.1.1, it's a decrease in asset and a decrease in owner's equity. For 1.1.2, charged interest on the overdue account of a debtor. So this debtor has not paid in time. The account is overdue. They should have paid us, but they haven't paid us. It's now overdue. So we charge them what? Interest, a penalty fee for not paying on time. So here we are going to increase owner's equity. That interest that we've charged on debtor will fall under other income in the income statement. So which means we have found other ways of getting income from our normal trading. So that will also increase debtor because the amounts that the debtor owe us will go up because of the interest charged. So that will be an increase in owner's equity and an increase in asset. 1.1.3. A partner, M. Stick, took stationery from the office for his own use. That is drawings. Drawings is an expense. And drawings also decrease owner's equity, right? It decreases the owner's capital, where we write in the capital account. So what you have to know is that expense will increase by the drawings that were taken. Expense is part of owner's equity. It will increase, and owner's equity will also decrease because drawings decrease owner's equity as a whole. So under the owner's equity, you will have a minus and a plus, showing that there's a decrease and also an increase. So 1.1.4 said a credit balance of a debtor must be transferred to his account in the creditor's ledger. So here we have a debtor's account credit balance that must be transferred in his creditor's ledger. So this will be an increase in assets and a decrease in liabilities. So this debtor has a credit balance. So meaning that this debtor, we owe this debtor. The debtor has paid us more, so there's an increase in asset and a decrease in liabilities. So this is how the memo looks like. So those are how the memo looks like. Now we are going to answer the fixed asset or tangible asset note question. The information relates to Sandy Brothers for the financial year ended 28 February 2023. So guys, if the financial year ends today on the 28th of February, it starts tomorrow, immediately tomorrow. So if it ends on the 28th of February 2023, it starts on the 1st of March. So which means this financial year started on the 1st of March 2022. You can calculate from March 2022 to 28th February 2023, it's exactly 12 months. So keep that in mind. If the financial year ends on the 8th of March 2024, it starts on the 9th of March 2024. Remember that, guys. Calculate the missing figures indicated by I to 3 I's on a fixed asset note. So from 1 to 3, basically. Information. Note to the statement of financial position. So we have the note to the statement of financial position. This is a balance sheet note. This is a fixed asset. Now we have buildings, vehicles, and equipment. Those are what we call fixed assets or tangible asset. Tangible is something that you can hold or see. So you can hold and see. Yes. So, guys, we have carrying value on the 1st of March 2022. And then we have cost, then we have accumulated depreciation, right? So those values at the top are the balances at the beginning of the financial year. And then movements where we have additions, disposals, and depreciation are movements during the financial year. What had happened during the financial year? So with additions, it means additional buildings were acquired, additional vehicles were bought, or additional equipment was bought under additions. Under disposals, it means buildings, vehicles, or equipment were sold during the year. So we will record them at carrying value. You record them at carrying value at the end. So we take the carrying value at the end and just of that asset that is sold and minus it under disposals. And then depreciation is the depreciation for the current year. So cost at the end of the year on the 28th February 2023 is calculated by taking cost at the beginning of the year plus additions at cost minus assets that were sold at their original cost price. And then that will give us cost at the end. So on question 1, building, how we got the 6,150,000, we took cost at the beginning and add the 500,000 to get the 6,150,000. We have additional information. Depreciation is calculated as follows. Equipment 10% per annum on carrying value. When we say carrying value, diminishing balance, we mean you take your cost minus your accumulated depreciation before you can calculate the depreciation amount. And then vehicle at 15% on cost. Cost is the same as straight line. So you just take your cost and multiply it by the given percentage. During the financial year, extensions to the buildings were completed. An old vehicle costing 300,000 was sold at a carrying value on the 31st of August 2022. The accumulated depreciation on this vehicle was 240,000 rand on the 1st of March 2022. So write this information down because I'll be going to a separate page to do these calculations. So an old vehicle cost 300,000 was sold at a carrying value on the 31st of August 2022. And then they said the accumulated depreciation on this vehicle that was sold was 240,000 rand on the 1st of March 2022. So at the beginning of the financial year, we just need to add the depreciation. New equipment was purchased on 1 November 2022. So this is all the information. Let's try to calculate the cost at the beginning for building. So for the first one, we are going to take 6,150,000 rand, and then we are going to subtract 500,000, and that will give us 5 million 650,000 rand. So that is the amount. And a vehicle was sold. So the cost of that vehicle was sold on the 31st of August 2022, and the cost of that vehicle that was sold is 300,000. We are going to multiply that by 15, divide by 100. Remember, depreciation for vehicle is calculated at cost. And then this vehicle was sold in August, right? So we are going to calculate from the 1st of March at the beginning to until August to see how many months the vehicle was in the business this current year. So it's March, April, May, June, July, August. That is 6 months over 12. And then you put that into your calculator. And then you will get the amount of 22,500 rand. So that is the amount. So now we have to calculate the carrying value at the end so that we can put it as a disposal. So we'll take the 300,000 rand, 300,000 rand, subtract they told us that the carrying value of the asset being sold is 240 at the beginning. So we take that one, and then we just add depreciation of 22,500 rand, and then we are going to get 37,200. So that is the calculation for number 2. And then for number 3, a new vehicle was bought. New equipment was bought, sorry. So let's do new equipment. The calculation for the new equipment, the value of the new equipment is 270,000 rand. So we're going to multiply that by 10, divide by 100. That is 10%. Is the diminishing balance, but we didn't have any accumulated depreciation, so that will give us 27,000, and then we will multiply. The vehicle was bought on the 1st of November, so we calculate from November until the end of the year. So that's November, December, January, February. It's 4 months, so that will be 4 divided by 12 months, and that will give us 9,000 rand. So guys, if a vehicle was bought, you calculate the months from the time the vehicle was bought. But if the vehicle was sold, you start from the beginning of the year until the month that the vehicle was sold. So if it was sold at the end of the month, you include that month. But if it was sold at the beginning of that month, you do not include the month in which it was sold in. And then again, what you have to know that if it was bought at the end of the month, you do not calculate the month that it was bought in, because it's at the end, right? So we need to calculate depreciation for the whole month. You have to add a whole month. So remember that, guys. So if the vehicle was bought at the beginning of a month, we include that month when we calculate the months. Now that will be the depreciation for the new vehicle. For the old ones, we have 970,000 minus that is the cost at the beginning for equipment on the fixed asset note, 610 1 2 3, and then that will be equals to 270, not 200, sorry, 360,000 rand, and then we will multiply 360,000 rand by it's 10, right? 10 divided by 100, and that will give us 36,000 rand. Now the depreciation on equipment, the depreciation on the equipment equals to 9,000 plus 36,000 for the old and the new vehicles, that is 45,000. So this is how these calculations are. So this is the answer. This is the memo. So here the memo of the accounting equation, and here is the memo for the question we just did. So for the last question, we will do this one, and this will be the end of this question. Choose a GAAP principle from column B that matches the description in column A. Write only the letter A to E next to the question number. 2.2.1, 2.1.1 to 2.1.4. So let's start. In column B, we have materiality, business entity, matching, prudence, and going concern. So materiality says everything that is important should be on the face of the financial statement. Business entity, the affairs of the owner and the business should be kept separate. Matching principle says, what does it say? It says a transaction should be recorded in a year in which they occurred. And prudence says we must record things exactly the way they happened, so we must not fake incomes and expenses. Going concern says prepare the financial statement with the hopes that the business will continue in future, something like that. I'm just trying to, this is not the exactly thing, but I'm trying to remember what each principle means so that I can be able to answer. It's very important to read your theory so that you know. Is that income and expenses must be recorded in the current financial year. That is matching principle. 2.1.1 is C, matching principle. 2.1.2 says affairs of the owner of the business must be kept separate from the records of the business. That is B, business entity. 2.1.3 says financial information relevant to a reader of financial statement must be disclosed separately. That is materiality. And then 2.1.4 says the assumption that the business will continue in future, that is going concern. So this is the answer for that question. Thank you very much for watching this video. Until the next one. Bye.